Hey there, crypto family. Welcome back to another video where I'm bringing you that daily crypto news. Today's article comes from the Bitcoinist, and we're going to go over what could change for South Korea's crypto regulations. Yes, President Yoon Suk was elected. That was like what, last week, 2 weeks ago, and he was a big crypto friendly guy, and he wanted to change a lot of rules. So let's see what's going to go down. The new president of South Korea, Yoon Suk Yeol, wants the country to lead the crypto market. Recently, he vowed to deregulate the virtual asset industry and expects to set a more amicable regulatory framework in order to promote local growth. To realize the unlimited potential of the virtual asset market, we must overhaul regulations that are far from reality and unreasonable. Yoon Suk Yeol said at a virtual asset forum at a Seoul hotel. Yoon believes that the country must shift to a negative regulatory system to ensure at least the virtual asset market has no worries and has proposed measures to assure the South Korea's crypto industry can be a house to new unicorns, startup companies valued at over $1 billion. His campaign targeted voters in their 20s and 30s who want the country to open up the doors to the booming crypto industry. Reportedly, before strict measures were taken, local retail traders were starting to turn to digital assets and buying less traditional stocks, but the government aimed to curb the hype. The latest global political push toward digital assets must be setting an example to many other politicians about how supporting crypto could win them an election. South Korea's current regulatory framework, Freeman's Law, explains that starting in January 2018, the South Korean government sought to regulate cryptocurrency trading by restricting trading only from real name bank accounts. The country's very restrictive measures do not allow foreigners and minors to trade cryptocurrencies. In early 2020, the government introduced an amendment to the Act on the reporting and use of specific financial transaction information. This new framework legalized cryptocurrencies and established company measures or compliance measures. The crypto exchange regulations remain strict, as well as the rules on the customer's age, limits, and restrictions for foreigners or anonymous traders to withdraw funds from e-wallets, cash withdrawals, I can't say cash withdrawals, and so forth. Moreover, there is proposed tax framework that has been delayed to 2023 due to backlash from investors. The Finance Committee of the South Korean National Assembly intends to defer a 20% to 25% tax on crypto profits over the 2.5 million Korean won. So that's about $2,100. Citizens would have to pay tax on any inherited crypto assets as well as the ones received as gifts, regardless of the gifter's family, such as friends and acquaintances, etc. Now, what could change with the new presidency? The president-elect has pledged to revise the tax measures and proposed to raise the threshold for capital gains tax to 52.4 million Korean won, which is $42,450 US, meaning that any gains below that mark would be tax-free. So very nice. That's actually really good. Yoon intends to sign the basic digital asset law, which would protect investors and companies by offering an insurance policy to secure them from the loss of their assets to hacks, fraud, cyber attacks, and other illegal activities. I will foster a digital asset investment environment similar to the stock market to ensure young people can either enter new markets without fear. And although the elected president can realize some of his proposals through presidential orders, he might face some obstacles with the no tax proposal, which needs to be reviewed by the National Assembly. New regulations of the digital assets will also need legislators to pass a bill and set up an agency. South Korea is placed among the world's top 5 technological innovators, and it is among the top 10 economies. More amicable regulations to institutionalize and advance the digital asset industry could turn into a huge growth and adoption, and then they might not be as far from becoming a crypto hub. So very, very cool. So yeah, so President Yoon is actually changing a lot. So the biggest one right there was the being taxed if you made 52.4 million Korean won, so $42,000. Like anything below that, tax free. So very, very nice. That's rather like someone gave you some crypto as a gift, or it's treated as earned income. So that's a nice, huge change. And like, yeah, if you didn't know, like how he wanted to kind of see, like he targeted the 20s to 30-year-olds of the country who want more open doors on the crypto industry. So he set off some NFT campaign platforms. So where like he gave like, I believe like an NFT like vote for Yoon button, and that became like a little digital collectible for them to have. But that kind of got him over the edge. So very awesome, very good news. Wait till we start seeing more in America and the rest of the world, how everyone's going to be changing their laws and regulations and everything, because time's changing fast. Like we're seeing like countries start their own CBDCs out there. We're seeing the more use cases of cryptocurrencies because of certain situations out there. Russia, we had the Canada issue, just people being in control of their cryptos and like how we're going to tax it because tax season is just around the corner. But yeah, so very cool article. I thought so. If you guys did see, hit that thumbs up button, subscribe to the channel so you don't miss a beat. And then, yeah, until next time, the Crypto Sherpa is out.